Good evening, everyone. We are just waiting for the waiting room to empty so that we can start. We have a few more people just waiting to join, so just bear with us for one moment.
Good afternoon.
Good afternoon. Good afternoon.
Good afternoon.
Okay. All right. Thank you, everyone, for being here with us this evening. And we are going to talk about mortgages. Before we get started, I'll just introduce myself. My name is Selena Archer, and I work along with the Teachers and Salaried Workers Cooperative Credit Union Limited. And I assist the business development team with marketing initiatives such as this one. So before we get started and we tell you about our Switch and Fresh Start mortgage campaigns, I just want to have a few housekeeping notes for everyone. So to start off, this is a particularly large conference or webinar. And what we'd like everyone to do is to mute their mics. And this is so when our presenter is speaking, we can all hear. Again, because it is such a large webinar, what we would like to do is entertain all questions within the chat box. So please, if you have a question, we want to hear from you. Just put it into the chat box and we will make sure that we ask that question and have it answered. In the chat box, you will also find us putting information into there, which will be our email address. So you'll also be able to email us any questions that you may not want to ask publicly, but you may want to ask privately. Again, this is a webinar session and your safety is extremely important to us. If you are getting any inappropriate messages from anyone, please feel free to message me privately and we will handle that on your behalf. Also, just again, a reminder, we are on the internet. So if you do have your cameras on, please remember that we can see you. So just a reminder about that. And we'll also be putting into our chat box information about our website so that you can visit our website, also our Facebook and Instagram pages. Now, this is no ordinary webinar because we actually have our general manager, Mr. Byron Miller, who is leading today and is going to tell us all about the Switch and Fresh Start mortgages. This is a wonderful opportunity. We do hope you take advantage of it. Remember, while we do ask that you stay muted, that chat box is open for questions. And without further ado, Mr. Miller, I am going to pull up your presentation so that you can take this away.
Thank you very much, Ms. Archer. And good evening, everyone. All the esteemed members of the Teachers and Salaried Workers Cooperative Credit Union, of which I am pleased to be the general manager and lead in terms of management and growth and custodian of the credit union. I'll just give you a quick update or quick briefing as to who I am. I have been in the financial services sector now here in the Bahamas for about 33 years. I've held senior positions at several major banks and both offshore and onshore. My experience in all aspects of financial services, be it investing, be it loans, be it depository, be it risk, is rather extensive. And I do bring with me quite a bit of positive load with respect to competence and leadership. Now, I'll say to you, it is indeed a pleasure for me to be here with you. And I wish to extend to you best wishes for a happy and healthy 2022. We know and recognize that we are still in the height of a pandemic, a very distressing period for us. But nonetheless, we are here today and God has seen it fit to ensure that we are here in our right minds, our bodies are working well, and we are grateful. The credit union, as you know, is a unique entity. When I came into the credit union, I said, wow, this is the best secret in financial services ever. The credit union is so dynamic that it allows members to be owners of a financial enterprise and at the same time be member customers. It's dynamic. You don't find that anywhere else in any aspect of financial services in the Bahamas. And so this is a unique scenario and a chance for financial services to empower Bahamians to be true owners You become an owner by joining with the credit union, and all of you have done that. And then you become a patronizer of your business. This is your credit union. This is your nest egg. This is your baby. It's been incubated and it came forth and it's thriving. I can say to you from a performance standpoint, your credit union is strong and it is thriving. We are seeing growth, exponential growth in every aspect of our business. When other financial institutions are closing the doors, cutting hours of operation due to challenges internally, your credit union remains at the fore. Our doors remain open. We remain available to our members, both telephone, online, and in person, because we know that you have needs and we want to meet those needs. And so as we grow as an institution, we are pleased to say that what we are producing for you, our member owners, is a dynamic, vast institution that is contemporary in its approach, that is profitable, and that is set to see even more significant growth over the years to come. And so in my introduction, I would want to encourage our member owners to go and bring somebody, go and bring a friend, go and bring family members, compel them if necessary, because this is a good solution to their financial future. What does the credit union offer? We offer all that the banks offer on a personal level. We offer you consumer loans for whatever reason, for a multitude of purposes. We offer you deposit accounts with interest, and I must emphasize with interest, and we offer you mortgages. And so as I now delve into the area of mortgages, it is certainly my delight to be able to speak to this subject because it is so empowering and so refreshing. Mortgages places Bahamians in a class that is second to none. You become an owner of real estate, an owner of your own home, your townhouse, your duplex, your triplex, whatever it is, your fourplex, and you begin on your investment property, if it is a duplex, triplex, earning a return. If it is your home, your family is able to nestle in and feel the quaint and quietness that comes with home ownership, the safety that comes with owning a home. And so we are pleased to be able to partner with you. And in fact, one of our slogans is your financial partner. We want to partner with our members. Besides, we encourage you to realize that you are our owners, okay? And what do owners do? When an owner owns an enterprise, if you own a food store, would you perchance go and shop at another food store? No, I don't think so. Would you perchance go and order online from that food store? No, I don't think so. You would spend time shopping at your food store so that your spending goes into your recurring revenue for business growth. And so that is what we're bringing to our members, not only today, but every day. We need you to be that business owner that supports the structure. So now let's turn our attention to why we're here today. Switch mortgages, mortgages on the whole, and our lending portfolio and what we can do to help our members. One of the biggest issues that I promote, or biggest things that I promote within the credit union, is quality service. I believe that our members should be respected and that the time that our members take to spend with us to inquire into products should be rewarding for them. We want to be able to provide you with information. In December past, we determined that in January, we would launch our Switch Mortgage campaign during a time when Bahamians are reasonably establishing, and I said reasonably establishing, their budgets for the year. And if you are a person that budgets, you would know and understand the importance of a switch mortgage. You would know and understand the importance of an interest rate moving from 8 or 9% to 4, 5, 6%. The savings are huge. And so we're here to talk about the switch mortgage and what these implications are for you as a current homeowner. So let's look at our switch mortgage. And this campaign that we're running, which started this month, runs until April 29th. And under this initiative, we are driving sales to allow our members to switch their mortgages from their current bankers to their business, their financial partner, to the very financial institution that they own. All right. So if you have a mortgage with another financial institution and you've been thinking for some time, boy, I really need to look at trying to figure out ways as to how I can reduce this interest that I'm paying to this bank. Well, Christmas is here today. This is your opportunity to benefit from huge savings as a result of switching. And so under our Switch Mortgage campaign, our rates begin at 4.75, and they can range upward to 5.5%. Even the ceiling, the maximum on our Switch Mortgage campaign is better than a lot of rates being offered by financial institutions. And so we want to reward our members for being our owners. I cannot stress enough the importance of our owners doing business with their company. All right, so take that into your core and inwardly digest that. Our rates are very competitive. We can reduce your monthly mortgage payment, which is music to your ears, because I know some of you are saying, okay, now listen, I got some obligations that I need to meet, and I don't see how it's going to happen. Well, consider a switch mortgage and allow for the equity in your home to cover your debt consolidations as well. So if you have miscellaneous consumer debt out there, and I think we all do, all right, that is what life does to us. It throws us these balls that demands that we go and borrow. So consider leveraging the equity in your homes and your properties to roll your consumer debt into. So where you're paying rates of 16%, 14%, 12%, you can roll all of that into your mortgage with equity and actually experience huge savings. Another point for consideration. Under the switch mortgage, we're prepared to cover renovations to your home if renovations and maintenance have been long outstanding. If you're looking at leveraging the equity in your home to purchase another piece of real estate, maybe you want to purchase a piece of real estate for your son, your daughter, or you want to purchase it for future investment, we can consider that underneath the switch mortgage campaign. And we allow terms up to 15 years. And I hear you say, hey, hold on a minute, why only 15? Well, 15 years is according to this particular campaign because most persons that have a mortgage would have had that mortgage for a year, 2 years, 3 years, some 10 years. Some persons have only 5, 10 years remaining on their mortgage. And so those are the persons that we're also appealing to. Listen, you have 15 years remaining, consider switching, all right? Or even if you have 17 years remaining, the rate reduction can cut 2 years off of your principal balance. So these are the things that our bankers do not typically tell us. But because you are member owners, we act in your best interest and in your safety. All right. So we're looking at terms of up to 15 years. And under our campaign, we waive all fees. We kick out that 1% fee that banks have been charging, the commitment fee. We say, no, what? We don't charge that. All right. We kick that out underneath this campaign so that the cost for you to move over from your current banker to the credit union is negligible, next to none. Under the switch campaign, we also facilitate mortgages upward to $250,000. All right. You may say, wait, hold on a minute. What if I am exceeding 250? Well, I have a product for you as well. And we're going to talk about that in just a moment. But the switch campaign actually facilitates and has a ceiling of $250,000. And we take care of your transfer fees, meaning all of the legal and statutory fees that are incurred in transferring your mortgage over, we cover that. All right, so there are no impediments to you moving over in terms of dollars and cents. And at the end of the day, you save. And here's the beauty of this. We know, and many of us perhaps can put our hands up and attest to the fact that how long it takes for banks to get back to us when we're applying for loans. Well, at your credit union, we're looking to, once all of your documents are in and submitted, getting back to you within 5 business days, letting you know the decision as it relates to your mortgage. That is unprecedented. Mortgages do not typically take 5 days from the day of all documentation coming in. For some
Alexa,
banks,
turn
it
off.
can go up. For some banks, that can take upward to 6 months. I've heard nightmarish stories where persons have been waiting for a year for approvals on their mortgages. And so here is a huge selling point and a huge rewarding factor for you. 5 days. Give us 5 days and we'll have a decision back to you. All right, so that in and of itself is a compelling reason to consider. I've given you multiple reasons now to consider a switch campaign. And what do you need now that you're contemplating switching your mortgage from another financial institution? You simply ask for your passport, driver's license, which is optional, your NIB smart card, which you should have, a job letter, and a job letter is necessary because you must be able to demonstrate that you can repay the loan, all right? And normally that is done through providing us with a job letter. Your current payslip, a credit reference from your current banker that says that your mortgage has been paid and is paid satisfactorily. Your loans and your credit cards are being serviced satisfactorily, and that fits within the gamut of our credit risk policy, all right? And of course, if the property is owned, we would ask that you show us evidence of that ownership so that we can get the application underway. Okay, so I think that's the same screen there, Ms. Archer. So in terms of the requirements for satisfying a mortgage application, we would require also an appraisal, and that would be a recent appraisal on the property. We would require the insurance, life insurance, and of course, property insurance. We would need to have evidence of that being in place. And obviously you would have that if you are with another financial institution. And also we would want you to be able to provide us with a very short summary. This is your loan statement that shows us your payment cycles. The beauty behind salary deductions is your employer takes the monies out based on what your commitments are and how you instructed them. They take those monies out that represent your monthly obligations to your financial institutions and forward them to the financial institution without you getting involved. And that helps us to maintain a very strong repayment history. And so we encourage our members to service their loans via salary deduction so that there are no breaks in terms of their monthly payments, and they can maintain a pristine, healthy repayment history. Okay, so just to recap the switch campaign, that campaign is currently running at $250,000, rates from 4.75 to 5.5% over a term of 15 years. And you can leverage the equity in your property for any number of reasons. You want to send your child off to university and you've been scratching your head trying to figure out where you're going to find $30,000. Here is the answer to your prayer. Okay, and if you do not have the list of requirements, please feel free to always call into the credit union. Email us at info@tswccul.org, and we will gladly provide you with the information. Okay, we have somebody that's manning that mailbox every day. Or you can send us a message via Facebook or social media, or Instagram, and we have somebody manning those channels as well. So for those persons that are saying to me, well, listen, I don't have a mortgage to switch. However, I want a mortgage. I am interested in a mortgage, and I want to get a mortgage with Teachers and Salaried Workers Cooperative Credit Union. Good news, we have a product here for you as well. On January 1st, we relaunched our annual mortgage campaign, and we are delighted to term it a fresh start because January 1 always brings in with it a fresh start. All right, you've been deliberately looking around trying to figure out how you're gonna qualify for a mortgage. Well, listen up, we got news for you. All right, under our mortgage campaign, Fresh Start Mortgage Campaign, our rates begin at 5% and range as high as 6.75. And the technical issue around that has to do with risk. And we don't want to get into that component tonight. However, as you express your interest and you connect with us, we can explain to you why there is a rate variation. Again, we will be as transparent as possible. We will explain everything to you so that nothing is left unanswered. We want to be your financial partner, which means when you make one step, we want to make that step with you. So our rates on our mortgage campaign ranges from 5%. And our mortgage campaign actually covers the construction of new homes, the construction of duplexes, triplexes, fourplexes. And we also allow for the purchase of new homes. If you are looking at a foreclosed property, or you know somebody who's selling a home and you're interested in that, or a duplex, and you want to purchase it as opposed to going through the challenges of construction, we are here for you as well. So our mortgage financing covers residential construction, both on the duplex, townhouse side, front, and on the residential or single family dwelling. We do require 5% down, whereas with the switch mortgage, there's nothing down because there's equity. We require 5% down on under the mortgage campaign, which is your equity injection. And that is required as a regulatory requirement in our governing rules. Here, we also have a 1% commitment fee, all right? Since there is no equity, we are actually not taxing our members, but asking our members to pay a 1% commitment fee for us to see this process through from beginning to end, all right? A new mortgage, particularly a construction mortgage, can be very time consuming, very tedious. And I always say to my members, you have to be very patient during this time. Emotions can boil over, and we ask you to be patient because these are very trying times when you're going through what we call a stage drawdowns or stage construction, all right? So we always ask, built into the application process is a 1% commitment fee. And like our switch mortgage, once we have all of your documents in hand, you get an indication from us, a decision within 5 working days. Again, unprecedented and phenomenal. What are our requirements? Of course, like the switch mortgage, we require a passport. And of course, we can only lend to Bahamians. We require your driver's license, which is optional, your NIB smart card, job letter, your pay slip, a current pay slip, at least 6 months or less, but we would prefer a current one, no 1 month in age. We're also looking at credit reference from your existing banker. If you solely bank with the credit union, there is no need for a credit reference. However, if you do have a credit card out there, we would need a credit card statement, be able to assess your current position on servicing your debt and make sure that we can carry that burden with you. And if you are purchasing real estate, you would need to bring in the sales agreement, okay? So that represents the agreement between you and the seller to enter into this transaction. So when all is said and done, you can position yourself today. If not today, then you have the information to arm you to position yourself for a mortgage in the very near future. You can save for a mortgage your down payment. And of course, with a new mortgage comes your closing costs that comprises your legal fees, as well as your statutory fees. So your legal fees would be the fees that your attorney will charge you anywhere. I believe the bar has a limit of 2.5% of the face value of the mortgage. And then there is the statutory fees. Now, underneath the Credit Unions Act, members of the credit union that secure mortgages do not pay stamp duty on the mortgage. That is waived. That is the best secret in financial services ever. All right, so that is automatic for credit union members. And then you have the stamp duty on the conveyance. And that is typically shared between the current owner of the property and yourself being the new purchaser. Okay, so that is often financed, not financed, but covered by the member owner who is looking to secure the mortgage. We would require an appraisal on the property if the land is vacant. And if the land is vacant, we would also require, if you are going to be building right away, we will require your contractors, at least 3 contractor quotes, so that they are comparable. We can see exactly where you're getting value. We will not seek to step in and dictate to you which contractor you should be using. You go out, you find your contractor, get 3 quotes from contractors, and you determine which quote you want to work with. All right. And we would work with that by incorporating that figure into the total mortgage. And then we would look for contractors all risk insurance. That would be something that you would typically take out, ensuring the construction as it progresses. And I'll tell you, during the construction stage, any number of things can go wrong. I have a neighbor, he was building and he put some expensive windows into his home. And he left the front door, there was no front door. And the owners came and took his expensive windows out the night that they were installed. Well, suspicious? Yeah. But it left them holding a loss. But luckily he had contractors all risk insurance and he was able to go to his insurance company and claim. And the insurance company was able to replace his windows for him at no loss to himself. So you would require the contractors all risk insurance. At the completion of your construction project, that insurance will then be converted by your insurance company to comprehensive homeowners insurance, covering all of your property and your content if you so desire on the content side. As I indicated before, you will require 5% down on a mortgage under the Mortgage Fresh Start mortgage campaign. And if you are constructing in an area that is a new subdivision, of course, we will require evidence that your building plans have been approved and that the area has been approved. The subdivision approval has been granted. All right, so that is quite a bit. And I know we want to set quite a bit of time for questions and answers. And so I want to open the floor now to any questions that you have. And I will see or try my endeavor best to answer those questions. If not, we will take them away. And I ask, if you don't get to ask your question tonight, or if your question isn't answered, please email them into us, as Ms. Archer had indicated at the top of this meeting. Email them to us and we will gladly respond to you.
Thank you, everyone. And thank you, Mr. Miller. So what I'm going to do, again, this is such a large webinar. We have a number of people in the room and we have loads of questions that have come in through both private message and through the general chat. So what I'm going to do is we're going to spend some time going through those questions. I'm going to go through the chat now and pull them up in the order that they were asked. Okay, so what is the amount of a mortgage loan for government employees?
We don't have a standard amount. We typically ask for our members to identify what it is that they want to achieve. If you're looking to achieve the purchase of real estate vacant land for the time being, and in 2 years when equity is realized, then use that equity together with the value of the property to qualify for a mortgage, you can do that. But we typically ask for you to have in mind a game plan. If you're looking at a home, real estate and a home for $250,000, that gives us an opportunity now. 5% of that would be what, $12,500 down. And then, of course, you cover your closing costs, your legal fees and statutory fees. So we normally ask the member to come in, you tell us what it is that you're looking to do. But in terms of a pre-qualification, we can do that. We can sit with you and say to you, you do pre-qualify for X amount of dollars. in terms of securing real estate or a home, or a triplex, or a townhouse assembly.
Thank you, Mr. Miller. And this is a similar question, but this deals with debt consolidation loans for government workers. How much is the loan amount for that?
I did not hear the end of the question.
I apologize. So how much is the loan amount for debt consolidation for government workers?
Our debt consolidation campaign actually allows for upward to, I think it is 100,000. However, we are careful and cautious given where we are in the season, and we take requests on a case-by-case basis. So there is no generic limit. However, there is a case-by-case approach with respect to debt consolidations. And I would ask that person to give us a call so that we can have that discussion. But as it stands now, our maximum lendable limit is 100,000, but that is on a case-by-case basis.
Thank you, Mr. Miller. The next question is, do the interest rates change or do they stay the same?
On mortgages or consumer loans in general?
I think in relation to mortgages, but both
mortgages, our mortgages are floated on prime. The prime rate is determined by the banks and the central bank. The last adjustment in prime was in January of 2018. The prime rate is now 4.25%. So we would normally tack on maybe 1.5%, 1.25%, 1.75% on top of the prime rate. So all mortgages float on the prime rate. And so if the prime rate increases, your interest rate increases because the interest rate is floating on the prime rate. If the prime rate reduces, your interest rate reduces. Now, since I've been in financial services for the last 32 years, I've only seen the prime rate reduce. When I first joined banking, I think the prime rate was 8.75%. And we are now at 4.25%. So you can see that it has reduced tremendously. Will it continue to decline? I don't know, maybe. But the mortgage rate is floated on the prime rate. So, and we do not control the prime rate. But I can say safely that we have been seeing reductions in prime over the last 30 years. With respect to your consumer loans, yes, those rates are fixed and they are not touched unless the member provides us with increased equity down. That can come in the form of a fixed deposit, cash, shares, or a number of items that we acknowledge that can be held as collateral. The more collateral that you can provide for a consumer loan, the cheaper your rate would be because your risk reduces. The risk of loss to the institution diminishes. And so our loans are priced higher if there is more risk and lower if there is less risk. For example, if your loan is cash secured, fully cash secured, you can be looking at rates of 5.5%. And the beauty of the credit union is, and the banks have stolen this idea, is that you can save with the credit union at the same time as getting your loans. And so as your loan balance is coming down and your share savings or your savings are going up, you're in an enviable position. Are you in that position today? Are you able to say that you have a savings? Your bank is putting aside money for you as your payments are coming in, as your savings are coming in? I don't know, but your credit union, set our path to actually converge with yours so that at the end of a loan payment cycle, you have a nest egg.
Thank you, Mr. Miller. Our next question, can a switch be made if you are behind with your previous carrier?
No, that cannot be made. A requirement of the credit union under the switch campaign is that your history is a good one, a strong history. Now, I would say to you, if you've had challenges in the past and you have rectified those challenges, that you may perhaps want to consider a regular mortgage. But of course, there are no guarantees. We still have to assess you, okay? If you have been demonstrating delinquency and there's regularity or what we call chronic delinquency, the likelihood of securing a transfer mortgage or a switch mortgage is less, okay? So you're looking at actually presenting a mortgage that may end up being a challenging or a troubling mortgage, and we want to be able to manage that risk.
Thank you. I know we covered this in the presentation, but just for anyone who might have missed it, this question was asked. Do you offer 15-year mortgages once the customer is qualified?
It's a good question. We offer mortgages up to 25 years. Okay, so 15, if you request 15 years, yes, we can meet that need. If you want a mortgage for 5 years, we can meet that need. But our maximum allowable mortgage term is 25 years. All right, and we always set that term to coincide with your retirement year. All right, so we would want a mortgage to be fully satisfied by the time you hit the age of 65. Okay, that way you are not looking at making any loan mortgage payments after your fixed income ceases. All right, it is very burdensome and challenging when you have gone into retirement and you still have a balance owing on your mortgage. All right, you want to be able to burn your mortgage on your 65th birthday, if not before.
Thank you. We have another question here. How much is membership?
Membership, that's $278 roughly. And that is not costing you. I want to emphasize that persons would typically ask that question, how much is membership? It is better structured by asking, what is the value of my initial investment? Because you become a member owner, all right? So your initial investment into your company, into your credit union is $278. And trust me, that's a drop in the bucket in comparison to the benefits that the credit union makes available to you collectively under the cooperative movement. So there's tremendous value in paying that $278, investing it, all right? Because it's a huge investment for a big start for you.
Thank you. How long do you have to be a member of the credit union to be eligible for the mortgages?
Well, typically we would want persons to be members with us for at least 6 months. However, we recognize that due to the competitive nature of the loan market, if we set a member off for 6 months, we may not see that member again. So we would sit with you as soon as you are ratified by our board as a member of the credit union. You can go ahead and complete an application for consideration for a mortgage, which we will actually review. All right, so ideally the answer to your question is typically 6 months. However, due to the competitive nature that we find ourselves in the competitive environment, we would say to you, come in, give us a call, set a time to come in, get your accounts open, make that initial investment of $278, come and talk to us about your future.
Okay, and this question is, do you have to be a member to obtain a mortgage?
Yes, you must be a member of the credit union to benefit from any offering of the credit union. That's why they call it a union. We're all together. It is members helping members, all right? So yes, you must be a member of the credit. And let me preface that by saying that being a member owner places you, and again, in a dynamic position to benefit not only you, but you're helping other persons as well. It is brothers helping brothers, sisters helping sisters.
Thank you. We did have one person ask, they are on a family island. They asked if we could get in touch with them. So I will be putting, as soon as I get to the bottom of these questions, I will be putting into the chat the email address for us so that you can copy and paste that into your browser. But it is info@TSWCCUL.org for any questions that you may have and you might want somebody to reach out to you. Just email us and then we'll get right back. Our next question is, if I have a consumer loan at another bank, but I want a mortgage to build a house. I assume that is, yes. So if they want a mortgage, can they come over?
Of course, we can consider that. Now, let me tell you, you would have heard me say that with the purchase of real estate for the first time and the construction of a home, we do not recognize equity in that project for the first 2 years. All right. So typically, if you have a consumer loan, one of two things can happen. You can seek to bring that loan over and it will continue as a consumer loan, but we will seek to reduce the rate so that you have more leverage on the mortgage side. Yeah, so that you can get your ability to qualify for a mortgage is more favorable. Or you can allow that loan to remain at the institution where it is if the balance is negligible and it's going to be paid out in 3, 4, 5 months anyhow. You can choose to allow it to remain. However, we would want to receive a printout to help us in assessing what we call your debt service ratio, so that we're protecting you as the potential homeowner and not placing an unreasonable financial burden on you that you will not be able to carry satisfactorily. All right, so if you do have a consumer loan, we can take that into consideration. And again, we want to be the financial institution of solutions. All right, we want to be able to say to you, this particular avenue won't work for you, but consider this. All right, we want to be able to give you options.
Thank you again, Mr. Miller. There is a question, will the slides be emailed to individuals? Let me say that we do send out the recording of this webinar to all of our registrants with the appropriate information and the information that has been discussed. So you may not get a slide deck, but you will get the requirements and you will get all of the information about both mortgages. That is the switch and that is the fresh start. The next question is, what if the bank has the title document?
Sorry, what if the bank has the title document?
Yes, sir.
What if the bank, if another institute, the bank has the title document, we would look to pay out that institution. Once your mortgage is approved, that means that we are looking to pay out the balance of the loan that's over the property. All right. We can't build a home unless we have real estate. Okay. So if there is an existing mortgage over the real estate, the vacant land, we will incorporate that balance into the mortgage total. That would be the value of the cost of the balance of the land, and the cost of the construction. We will marry the two. When your mortgage is approved and your attorney has completed their title searches and provided us with good marketable title, then we would cut a check to your banker and say, please release this individual from their obligation. Your banker would prepare a satisfaction mortgage along with all their documentation, send it to your attorney. Your attorney sends it over to us and your relationship is now solely with us.
Perfect. This is a current member who is thinking about switching to another financial institution for a lower rate and wants to know what can be done so that they can stay with the credit union.
We deem ourselves to be the credit union of solutions. I said that before and I'm not going to shy away from that. To that member, we want to let you know we value your business. You are a member owner. You will not find the benefits anywhere else. Well, some banks are offering 3.99%. And I'll tell you, we will not be able to match 3.99%. Let me be very real there. However, there are other ways that you can gain based on benefits from the credit union. But I would say to that member, give us a call. Give me a call if you're in that position and let's have a conversation. All right. We want to be able to talk around the issues and figure out a solution. We don't want to be losing members. Again, we don't want our members, if our members own us, we don't want our members shopping somewhere else. We want you shopping right here at home.
Thank you, Mr. Miller. Okay, I have been approved for plans for an Aplex, but only want to start with 4 right now. I own the land outright. Can I get a mortgage? If so, can I get an idea of the interest rate? Will it be 30 years or less? Can the property I own be used as the down payment?
Yes, the property can be used as the down payment. That would be what we consider equity. If you have plans for an Aplex, but you're looking to start 4, that we will actually consider exceptionally as a residential investment. And the rates then that would apply would range, I think it's again 5% to 6.75%. All right, so yes, we can consider that. Now, here's the catch-22 with that. If you were to attempt to stretch the money in order to build an extra 2 units, that is going to result in cost overruns. So we manage the construction of duplexes, triplexes very closely. We look at the drawdown schedule. We look at what the appraiser says should be disbursed, and we disburse that amount. All right. So many times homeowners are so motivated. They're talking with the contractor. They're saying to the contractor, okay, knock down this wall, put this wall over here. No, change this. No, go with these windows. I want this type. And so the contractor now is forced to change his or her price. All right. So I said that to say that we're always tempted when we're building apartments, townhouses, to do just a bit more to see if we can get the money to stretch. I will tell you, resist that temptation. If you're looking to build 4 units, go with the 4 units. We factor in potential rental income. So if your appraiser in his report says each of these units can likely attract $800, $900 in rental income, we factor in 50% of that into your repayment ability. And that helps to improve your debt service ratio. All right, so yes, we do look at 4plex. Now, when you do come back in for the next 4, your rate would then change to a commercial rate.
Thank you again, Mr. Miller. Just such great information, and glad we're hearing it from the general manager. Okay, so here's a question again. I have 9 years to, before I start this question, I'm just gonna say that we are at 7:16. We are going to be closing this meeting at 1/2 So I am going to encourage any new questions. I have put into the chat box our email address. We do want to hear from you, but we are running out of time. And if we do not have the opportunity to ask your question, please, please, please email us so that we can get back to you. All right, so this question is that I have 9 years to retirement. I would like to burn my mortgage upon reaching 65. I would like to switch and increase the amount of payments so I can be done with the mortgage. I suppose that is, can that be done?
Absolutely, it can, and we encourage you to do that, right? The last thing we want our members to be shackled with is a mortgage post 65. All right, we want to be able to celebrate with you, burn your mortgage at age 65, if not before. So if you have 9 years remaining and you have capacity, even if you're able to make principal payments, all right, I'll tell you, financial institutions don't like that. But when you are a member owner of the Teachers Credit Union, we will allow you to make the additional principal payments. If you are in that scenario, you want to get that mortgage behind you and stay on track at age 65, the mortgage is gone, by all means. All right. We are not profit driven. We are people driven. We're here to work and assist our members.
Okay, another great question. Can I borrow against a CD and what is the interest rate?
You can borrow against a CD. If that CD allows you your loan to be fully cash secured, the applicable interest rate would be 5.5%.
Thank you. I want to encourage, because we have questions flying in both to the general chat and to the direct messages directly to me so that I can read them for you. Please, 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 please email us. We do want to answer these questions. This question is, good evening, would the 1% commitment fee be applicable if you have equity, i.e. property already?
Well, yes, it would be, because it's a new loan. The 1% is only waived under the switch campaign, and that is built into that particular package.
Thank you. Question, this is another question. For example, let's say your annual income is 35K. You would have a consumer loan causing your DCR to be at 50 to 65%. Would the credit union allow you to do debt consolidation inclusive with a mortgage to allow you to be eligible for a mortgage at 5%?
To that individual with a heavy consumer borrowing, if the DSR is near 60, 65%, that's pretty heavy. I would say to you one of two things: either you refinance the existing loan with your current service provider, your financial company, or we can look at financing it over a period of 7 years and see how that impacts on your DSR. However, we won't be able to mix the property loan with the consumer loan. The two must stand separate because they are separate rate structures. All right. So I'd say to you, one of two things: either get your existing banker to refinance, lower the interest rate if possible, pledge with security if you can, to lower the rate, or you can bring, if you qualify to bring it over, we can look at that. You may want to look at purchasing real estate first before going in or venturing into constructing a home or a townhouse or a duplex. Purchase the real estate first, so at least you can build equity in the property as your consumer loan is reducing in value.
Okay. We have another question. What exactly is a commitment fee? Is that something I would get back, or is it a fee I will be charged if I move my mortgage? And 1% of what? The value of the house or property I'm buying?
Good, multiple questions. The 1% commitment fee is the fee that you pay for the institution taking the time to prepare the paperwork, to oversee the approval process, to prepare instructions into your attorney, to follow up with your attorney, to ensure that open matters are closed. It is the time that we spend drawing down the loan. There are 5-stage drawdowns to a residential home. If there is a complex that is 2-story, there may be more than 5 stages. And so what that is really a payment to the institution for the time that will be exhausted by the lender to ensure that you get into your home, your occupancy certificate is provided, and everything is nailed out adequately. We've seen cases where contractors would have walked out on the homeowner, leaving you with a partially finished building, and we have to go back and end up with cost overruns. We have to go back and prepare another application. We won't charge you another commitment fee. However, that commitment fee covers all of those things. It is non-refundable, and it is 1%. It represents 1% of the amount that you're looking to borrow.
Thank you. If there is equity in the property, will this help to determine my mortgage qualification amount?
Definitely it will. And it does that by actually reducing your interest rate. If you have equity, that means then that your loan is actually secured by more collateral. So in the event of default or risk of default, the loss or the potential exposure to loss is less. So of course, the interest rate would be less as well.
Thank you. There is a question here. It is, what about owner builder projects? And I assume that means, what about financing them?
Yeah, no, we don't get involved in those. We are strictly people helping people on a residential level, not on a commercial or corporate level.
Okay, perfect. Again, I see the question, will the recording be sent to the emails? It certainly will, along with all of this information. And we had a member who popped in late and asked for the non-member requirements to apply for a mortgage, but Mr. Miller, you have covered that.
Yeah, you must be a member.
Yes. And again, all of that information will be sent to you once we finish completing the production of the recording. Here's another question. Can I apply online, or do I have to come into the branch?
We do have our loan application mounted on our corporate website. There is an application there that you can begin filling in. There's also an application for a new account. If you're not currently a member, you'd want to complete that application. Click submit, and somebody that's manning that box will give you a call to take you to the next step.
Thank you.
Now, I just want to interject here, Ms. Acho. We do encourage, given where we are in the pandemic, the fact that we're dealing with Omicron, we're asking our members, we conduct our interviews online anyhow, so you do not have to come in. There is that option, and we ask our members to take that option, allow us to conduct the interview either by telephone or online using Zoom, and then you would sign the application, send it back into us, which aids in your convenience as well.
Thank you. We have about 5 more minutes left, guys. So we are going to, again, try to get through as many of these questions as possible. Please use that email address that we have given you in the chat. So for the fresh start mortgages, can equity be used? Sorry, can equity in the property be used?
No, but the fresh start, this is a startup mortgage. There is no equity that is acknowledged for the first 2 years of that loan. After year 2, and if you have the property appraised, at that time, we are more than prepared to acknowledge the equity there. And that will give an opportunity to do 1 or 2 other things as well. If you want to leverage it for another piece of real estate, or if you want to further your education, you can do that. All right, but we do the 2-year thing. Most banks do 3 years. 1 or 2 banks that are ultra conservative would go to 5 years. But property prices in the Bahamas have been very stable. You and I would know that because we look at the prices. In fact, the prices are going up, right? And so you can pretty much predict over the course of the next 2 years, you will not see prices dropping. Even with the glut in terms of foreclosures, we're not seeing prices dropping.
Okay, thank you, Mr. Miller. Can you please repeat what fee is waived due to getting a mortgage through the credit union?
Oh, the credit union under the act, the Cooperatives Act, allows for mortgages, the stamp duty on mortgages to be waived. And also, when you are performing your transactions in the credit union, you do not pay stamp duty in the credit union, okay? At your current bank, you are paying stamp duties, all right? So you're being, your wealth is being decreased every month when stamp duty runs at the end of the month. With those institutions, with us, your wealth stays with you.
Thank you. This question is the 5% of the total mortgage, or can the 5% be used to hold the property, to meet that requirement? Sorry.
If you're looking to acquire the property only, the 5% would be the 5% value of the property, the purchase price. Now, if you're looking to purchase the property and build right away, it would be 5% of those 2 values combined.
Thank you. The switch mortgage deadline is in April. Is there a deadline to apply for the fresh start mortgage?
Fresh Start mortgage campaign is running through to the end of 2022. But we will encourage you to move quickly. If your challenge is savings, by all means, save with us. Do not save with those other guys. Save with us because we will pay interest on your money. And we will see a record of your savings so that as you are now progressing toward home ownership or real estate ownership, we simply need to go into your account, see how you've been saving, and that adds strength to your application.
Thank you. Oh, this time ran out very quickly. So I'm going to take probably the next 2 questions that I have in queue. I am going to again put the information in the chat for you, and that is the info@tswccul.org, because we will not have a chance to get to everyone tonight. So the next question is, what if I don't have the 5% down payment?
In that case, again, we are the financial institution of solutions. If you don't have it, then what we suggest you do is begin saving toward it. That 5% is absolutely crucial. We cannot circumvent, we cannot waive it. That is a requirement, right? Particularly on the purchase of fixed assets, real estate, and the construction of a home. If you don't have that 5%, come in, start saving with us. As I would have indicated in the response just before, as we see you building your savings, have your employer deduct from your salary a certain amount of money every month, send it into your savings so that you don't have to be hassled with doing that, right? And as we see those savings coming in, we can then prep for you in terms of being approved for real estate purchase or a mortgage to build a home or to purchase one.
Thank you, Mr. Miller. And this is the last question of the session, guys. Again, please use that email address. It is in the chat. Just scroll down to the bottom and you will be able to pick that up. I will also export this chat so that we will be able to use these questions on our social media channels and to answer them for you as well in those posts. But is this available for all islands, Grand Bahama included?
Your credit union Yes, we've seen Grand Bahama. We've seen mortgages drawn up and approved in Grand Bahama, Abaco. We've seen in Elusa. If our appraisers can get to your property, they can give us a valuation. And we can take a further charge. We can register a mortgage because those islands are all a part of the Commonwealth of the Bahamas. So there are islands that we will not give a mortgage for. For example, Rumkey, Crooked Island, Auckland's, Makewana. Those are hardship islands, and they're designated as such for obvious reasons. And if there is default, the likelihood of selling those properties is significantly diminished because of where they are located. Now, those islands where the population is a little more robust, such as Abaco, we have places in Andros, we have Grand Bahama, you have places in Bimini, you have places in Eleuthera. Yes, we would readily work with you.
Thank you again, Mr. Miller. This has been just awesome. I think that we have learned so much about Switch Mortgage, about new mortgages with Fresh Start. And I'm sure that everyone who did not have an opportunity to have their questions answered will email us at info@TSWCCUL.org. Or as Mr. Miller said earlier, please go to our Facebook and Instagram pages. And you can also ask questions through those chat boxes and DMs. We do have someone who does man those pages. We have a team available there, and we will get answers for you. Again, everyone, thank you so much for coming out tonight. We appreciate your time, and we wish you a very safe and good evening. Thank you.
Thank you. Good night, everyone.